Tesla stock continues higher for the third trading day in a row, breaking above a critical level of resistance around that 271 mark. What does this mean for Tesla stock? We'll discuss throughout this video. We do have a lot of Tesla stock breaking news, as we pretty much always do. We also have some news overnight that is sending markets higher in aggregate. The RSP, which is the equal weight S&P, is up 0.6%. The headline S&P is up 1/3 of 1%, so equal weight is outperforming today. First and foremost, let's start with your Tesla stock breaking news. Canaccord has raised their Tesla price target to $298 per share from $278 per share, their second price target increase in the past 5 days. They maintain a buy rating. So that's pretty rare to see two price target increases from the same firm within a 1 week period. It's kind of like they did some research, published a price target, and then they realized, oh wait, we could be undershooting this, and raise their price target again. Canaccord says, quote, "We see Tesla's stock is poised to outperform, given 1, the accelerating trends in its P&L, 2, potential for growth outperformance relative to its Mag 7 peers starting in 2025, and 3, favorable technical outlook. Without upcoming new products in the first half of 2025, Tesla is a near to medium term product cycle story. Longer term, Tesla also has a generational set of growth opportunities ahead, including EVs, autonomy and AI, energy storage, and robotics." And that pretty well sums it up. In the near term, it's all about Tesla's new models coming out, cheaper priced Teslas, and what that'll do for Tesla's growth story next year. But at some point within the next 6 to 12 months, it's going to change from that cycle growth to AI, to robotics, to some of these other things that especially the retail community has paid a lot of attention to that Wall Street has not. It's being reported that Volkswagen is exploring a series of cost-cutting measures for its core brand, including a 10% wage cut and a 2-year wage freeze, as it seeks to save $4.3 billion. It's also being reported now that Volkswagen plans to close at least 3 manufacturing plants in Germany and lay off tens of thousands of workers, as per Reuters. Which I think that really just highlights Tesla's exceptionalism. Tesla, yes, they've seen deliveries decline in Europe because of their financial situation. People are doing worse in Europe than in China or US. At least that's what it seems like in certain countries that are already in a recession. Tesla, though, is in a place of building new factories, in a place of thinking about further innovation. And that's just not where Volkswagen is at. That's not where a lot of Tesla's competition, including even Stellantis, is at. They're both struggling. Tesla has announced a new standardization to reduce the cost and complexity of electronics in the automotive industry, and is inviting all device suppliers and vehicle manufacturers to join them in this initiative. Today, EVs typically use over 200 connections. To simplify this, Tesla has simplified the connectors in its cars so that they use just 6 connectors. The Cybercab is now positioned in the front main entry at Giga Texas. And just in, Shaq now owns 3 Tesla Cybertrucks. The third one is a glossy maroon. It has a 26-inch Ferragamo wheels and the first Waydo wide-body kit put on a Cybertruck. Yahoo Finance asked this question to Bank of America analyst John Murphy. They say, "You ever seen a company like Tesla before?" John Murphy, Bank of America analyst, says, quote, "I've been doing this for over 25 years. I've never seen a company like this before. It's pretty impressive. You have Elon, a real innovator. He's shocking the world and bringing a lot to the table. He's really pushing the envelope, which I think is going to be great for humanity over time." Oppenheimer's Colin Rush said, quote, "Tesla doesn't need a low-end vehicle to continue to grow." Take a listen to this clip.
On Tesla, Colin Rush, Oppenheimer Senior Research Analyst. I thought it was somewhat disappointing, some of the stuff that we heard from Tesla. Why did the stock perform so well? I guess it's in the eye of the beholder.
Yeah, there's a couple of things. One, the gross margins on the auto side were better than expected. And it's pretty clear that the company is self-sustaining from a cash flow perspective. And as they continue to grow as an EV maker, and we continue to be very bullish about on their EV technology, it extends the runway on their ability to deliver on the autonomy opportunity. And while we have some caution around that autonomous technology, I think folks started giving them a lot more credit for that runway and their ability to deliver on that promise.
Colin, if you were just looking at the prospects for selling cars, selling Teslas around the world for premium prices, I mean, that part of it is it, would that cause you to buy the stock here? I mean, and even some of the profit being so profitable, but a lot of it had to do with that pure profit the company gets from selling those environmental credits to other automakers.
Yeah, I mean, when we look at it, it was about a little less than $800 million in credit revenue that they had in the quarter, and so there's a meaningful contribution to their net income from those credits, and that comes from multiple geographies. But at the end of the day, we look at least half, if not more, of the value being ascribed to their AI opportunity, and particularly autonomy as the first application within that AI bucket. And so for us, the EV opportunity is meaningful. They're executing on it well. They continue to drive costs lower and have great products. But the AI, bucket of profit pool that they're trying to dip into here is really what's driving the value in the stock. And we think they're further off from actually being able to deliver on that than what the stock is saying at this point.
If it does go, Colin, and I think that, we were a little bit surprised maybe that 30 trillion, that someone would even mention that number for what the company could be worth. And then Andrew said, well, why stop at 30, right? I don't know. You figure that's like Austin Powers.
Like terminal value? I mean,
why talk about trillions when you can talk about billions? But how much, what would that entail? How much would be the car business to get to anywhere, let's say a multiple of what the market cap is right now? How much of that will still be electric cars, and how much of it is going to be everything else that gets under the Tesla umbrella?
We're really looking at the potential for them to grow into, $5 to $6 of earnings by 2027, 2028. And so if you put a multiple on that in the high teens, you can get yourself into the $100, maybe $120 range for the stock. We're looking at the energy storage business at worth $20 to $30. And then the balance of the stock price here is really being driven by the AI potential. And they certainly have a very capable engineering team that's working on these opportunities. But it really comes down to when and what the competitive environment looks like. And right now, from a regulatory perspective, they're certainly behind. From a cars on the road perspective, they have more vehicles on the road, but not vehicles that are actually driving themselves. And so the testing process is going to take a fair amount of time before they can actually start monetizing that in a real way.
What about China, competition from China? How's that going to play out? Does it matter who's elected?
At this point, you look back at history and look at what happened with Japanese automakers, Korean automakers. You really end up having to make vehicles locally in domestic markets. And so the question is, what's the technology underlying that? And we're seeing the OEMs in both Europe and the U.S. make significant investments on driving cost reduction. And I think limiting some of the competition. I think the European market is a real example of what may happen, where we see BYD starting to penetrate that market in a little bit bigger way, but starting to actually manufacture in Eastern Europe and Turkey. In the U.S., I think it's going to be hard, in this political environment to really see, Chinese automakers start to penetrate this market. In a timely fashion that would start to take share from some of the existing manufacturers that are already here.
Did you know he was going to say no $25,000 car? We're just going to go straight to the.
I think we already understood that at the point that they said we're going to go to the version V2.5 and kind of get halfway there on the existing platform. It just doesn't make sense for them to go to that low end vehicle, especially when you can start monetizing, some of the ADAS functionality at a little bit higher rate. I don't think they really need to drop down to those price levels to continue to grow. And we actually had units growing ahead of our peers on the street here in 25 and 26. And I think they'll continue to grow into that opportunity. They do have better EVs than most of their competitors on the road at this point.
Right.
And I don't think they need to drop down to that low end to really drive volume into the 3 to 4 million vehicle a year range.
So according to Oppenheimer, Tesla doesn't even need a low price vehicle to drive the kind of growth that Elon is projecting next year, 20 to 30% volume growth. Now, really, it just depends what the margin is on those lower price vehicles. Hopefully that margin's really good. If it is, and that new lower price Tesla coming by the first half by midpoint next year is margin accretive, then that's going to be a big positive for Tesla stock. Bank of America says Tesla is charging up for the next wave of growth. They also reiterate their buy rating. It's also being reported that Gary Black has raised his Tesla price target to $300 per share. This is what Bank of America's analyst just said about Tesla's next growth wave. Take a listen.
On Tesla. You've covered Tesla for a while. And what caught me, amongst many things in your notes, we'll pick apart your analysis and your coverage to the company. Tesla is about to enter its second wave of growth. What does that look like to you?
So, I mean, I think, it's the new core to future company. And it sounds kind of weird because we in our comments, we have this framework of core to future and basically leveraging the ICE business and the truck business to fund the future, which is AV and EVs. Tesla is obviously at that next level with their EVs and their AVs to some degree. And what you're seeing is this real wave of core being sort of new products that are coming next year, as well as some beyond that are funding the future. And what we just saw was an improvement in gross margin that's helping fund this future. So I think what we're seeing is the evidence of funding of that future. And the future is Cybercab, next gen models, potentially full self-driving sooner than people are thinking, as well as potentially the robotics, that they've shown at the Robotaxi Day, as well as energy storage. So you think about that, there's kind of a soup of things there. And when you think about a stock like this, there's this huge opportunity curve out there, or frontier of all these things that can go right potentially for the company. And then you have this very strong core that's developing right now that's funding that. So the wave is going to look like many different things. It may take many different shapes as we progress through the next few years.
You've been doing this for a hot minute. Have you ever seen a company like Tesla before?
I've been doing this for over 25 years. I've never seen a company like this before. No, it's pretty impressive. And I think when you look at what's going on at Tesla, it's not Tesla, but you have Elon with SpaceX and everything that's going on at Tesla and XAI. And I think we have a real innovator, whether you like him or not, that is really kind of shocking the world and bringing a lot to the table. And we've had a lucky run here with Tesla with almost free capital for the better part of a decade. So he's been given tens of billions of dollars. But the reality is he's done something really amazing with it and is really pushing the envelope, which I think is going to be great for humanity over time. Hopefully Americans.
As someone that has covered this company literally, I guess, Dave, from ground, what is it about Elon? How is he able to surprise Wall Street and deliver, I would say, a very surprising third quarter, but I would say a surprising year, and then come out with things that most people thought wouldn't even exist?
Well, I think the answer no doesn't exist for Elon. If it's possible at all, he pushes forward. And I think there's a very important thing that the other companies face, and it's a constraint on capital. And that really is important. I mean, when you're focused on profits and returns in the short run, you can often lose focus on sort of the 1 to 20 year vision and what you really need to do to drive those earnings going forward and new products going forward. So I think with the luxury of his celebrity to some degree, as well as his intelligence as far as getting things done and dreaming about them, it really provides an opportunity that other companies don't have. The answer no doesn't exist, and the idea that you have to hit certain profit return hurdles in the short run, they're unconstrained from in a significant way, which is very important for long-term value creation.
Are you a big believer that this country is going to be filled with cybercabs?
So I think autonomy is something that is far more important than people are realizing. There's the simple side of this, which is the robo-taxi fleets that I think the Cybercab will probably play an important role in. But to be a selfish New York-centric New Yorker, which I've been for my entire life, we've done a lot of analysis on New York City, and there's a little over 13,000 yellow cabs here in New York City. they drive about 1 billion miles a year, right? So if you think that you can get your cost per mile lower than them or a human driver, that's less than $1 a mile. I think you and I would be happy to pay $2 a mile
in New York. $25.
Yeah, I know. I mean, the cost of moving around New York City is incredibly high, and you're going very slow. But if you could take that down and undercut, taxis and Ubers and Lyfts dramatically, you could have a huge business model. I mean, whether you pick $2, $3, $4, $5, each dollar above $1. So if you do $2, you're doing $1 billion a year in EBIT. There's actually room in New York City. It's hard to believe. Around 4 o'clock in the afternoon, late in the evening, and in the outer boroughs, right? Being a kid from the outer boroughs, there is a need for transportation there. So if you could go out and you could say, listen, I'm going to help you with your underserved community that is a hard time getting to work and getting their kids to school, and I'm going to charge them $2 a mile, which is a very efficient way and low cost way to get people around. There's a huge opportunity in major cities.
Tesla monetizing humanoid robots?
Listen, I travel a lot for work, and if I could have a clone back here in New York taking care of my kids and running around and doing a lot of the work for me, I would love it. So, and I might pay a lot of money for that.
Option activity today in Tesla stock from hedge funds and institutions is coming in at 106 different trades, totaling $65.5 million with a positive order value of 70%. So very positive again today. Tesla's short interest of free float has recently jumped up from 2.66% up to 2.86%. You have currently $21.5 billion sold short in Tesla, totaling about 80 million shares. You do have today borrowed shares of 507.2 thousand, return shares of 4.44 million. So you actually have almost 4 million shares today, 3.93 million shares that are being covered on. And I do think that is helping to drive some of the upside today for Tesla stock. But worth mentioning today, you really do have bonds dying yet again, seemingly out of nowhere. Once you hit the low today, bonds started to reverse and bonds started to die. Okay, now bonds dying literally refers to the price of bonds falling. So the price of bonds is falling today, down almost 1%. That is leading to yields rising. When bonds fall, yields rise. This line here, this up and down line, is on September 18th, the day the Fed cut rates 50 basis points. Ever since then, yields have been falling or rising. Bond prices have been falling. I do think today you are seeing some of the election getting priced into markets. 10-year Treasury yields are up 6.5 basis points, up to 4.29%. If we're rounding here, we would round to 4.3%. That is crazy considering today what's happening in oil markets. Oil, just straight up oil, is down 5.5%. That is what really gave the markets a boost, because over the weekend, Israel attacked Iran. It was a very limited attack, and it looks like this is going to be a one and done kind of situation. It does not look like Iran is going to retaliate. Israel did not strike oil production facilities. They did not strike nuclear production facilities. That's why oil is dropping so much. But why in the world is oil down 5.5% and bond yields are skyrocketing? That to me looks like election risk getting priced into markets. The question I will pose to you, does election risk get priced into equities in the coming days? As I explained in the last video, if we are going to see, this is a big if, but if we are going to see the election get priced into markets at all, it's likely going to start this week. We've already seen election risk get priced into bonds, and that's another big if. Does it get priced into equities, or does it stay contained in bonds? It's hard to say, but the higher 10-year Treasury yields do go, the more pressure it puts on stocks. And today, the pressure is definitely being put on. But again, markets are generally just blowing this off, just shrugging off this carnage in bond yields today. But I think it could get a little bit more aggressive over the coming days, and really above 4.3%, that should start to pressure equities in a larger way. And I do think the rise in Treasury yields today directly coincides with Tesla selling off from the high of the day today when you hit $273.54. Currently, Tesla stock at $270.20 per share. It's very volatile. But you have sold off a bit from the high of the day when those bond yields started to rocket out of pretty much nowhere. And bond yields, again, disproportionately hurt Tesla more than other companies. So that's a big pressure on Tesla stock. On the day today, the percent of stocks trading above their 50-day moving average is up to 57.89%. You have 7% of all stocks breaking above their 50-day moving average today. So today is actually a pretty good day for the broader markets. Again, it has to do with oil. Sentiment for Tesla stock is neutral at 45. Yesterday, it was neutral at 52. Message volume today is normal at 46. Yesterday, it was low at 42. And participation ratio today is high at 55. Google Trends data for the Tesla lineup continues to look good for the Model Y specifically, now at 28. It's been rising ever since about early October. The Model 3 has also been rising since early October, but did tick down 1 point from 23 to 22. The Cybertruck has been falling during this time from 47 down to 38, but that was destined to happen at some point. So in aggregate, things still look pretty good as far as trend data. And Tesla stock today, we want to see if Tesla can close above 270, specifically if we close above 271, or if we can get above that level in the coming trading days. If we in fact do, then you have a larger room to run, potentially into the 300s. The last time you broke above 270 and you ran all the way to $300 per share. Would I, put a top on Tesla's rally at $300 per share right now? Probably not. But again, it does depend on how the correlation causation relationship is going to work with Tesla. If Tesla stock moves higher, if markets fall, then Tesla could move way higher. You could see a weird little crowding trade that starts to happen in Tesla in that scenario. In the other scenario, Tesla stock sells off as the markets sell off. And I think bond yields today, that's really the thing that affected Tesla, that pushed Tesla stock back down today. But it's uncertain what's going to happen in the coming days. If bond yields continue to rise, that's going to start to pressure Tesla even more. If we can see bond markets relax a little bit and maybe equities take the hit, then I don't think Tesla needs to fall just because the rest of the markets do, theoretically, if that's what happens this week. Let me know what you think about this information down below in the comments section. Thank you for watching. Enjoy the rest of your day. Have a great and safe rest of your day. I will see you in the next one.